What's your style? Traditional? Bold? Comfortable? On trend? High-tech? Diversified? Trade in your own style.
Good afternoon, ladies and gentlemen. Welcome to the panel discussion on private equity infrastructure. We see the private equity infrastructure here in an unclassical way, because first of all, I have the great pleasure to have 4 representatives of private equity type of companies, which all are part of infrastructure for private markets as well. And they also show us the future where private markets are going to. Some of them already have done, they're like venture capitalists themselves, where one of them has already found its IPO. The other 3 are on the way, on the success, doing that kind of business in the future. My name is Thomas Breitenmoser. I'm head of investment consulting and controlling in Complementa, and I'm your moderator here. And with me, I have David Genn. David Genn is the CIO of Goji. Goji is now a subsidiary of Euroclear Fundsettle, is that correct? That's so correct. That's the IPO which I said you were successfully done. What they do is really doing the private markets, private equity kind of investments, doing in a digitalization way, so you can have easy safekeeping, etc. You probably can introduce yourself then later on a little more detailed. Then next to me is Nicola Plain. Nicola Plain is the CEO of Actionariat AG. Like that, Zurich-based, not London-based, like David. And Actionariat, what does bring the blockchain technology into the private markets, especially for smaller companies, to be able to raise capital in a more digital ways in there. So that's going to be an interesting topic as well to talk. Next to him is Philippe Teissonière. He is Chief Operating Officer at the moment and designated soon Chief Executive Officer of Leva. Leva is a one-stop shop in a kind of a syndication way, also for private market participants, and he will talk more about that. And then last not least, Philippe Naegeli of Genn. Genn does securitization in all kind of usually non-bankable, illiquid kind of assets and bring that to the market and also in there. And some of you I met already last year, and you all came with white sneakers. Now you have all proper black business shoes. That means technology goes not only forward, it also becomes first sight of becoming mainstream, and I think that's the future we'll see here. And with that, I would like to start and give the word to David to give a little bit more on what you do and what you bring to private markets in a sense of infrastructure, but also in a private equity sense.
Thanks very much. So David Genn, CEO at Goji, and our mission at Goji is to increase access to private markets. And I think one of the trends that we're all familiar with is that the private markets is the fastest growing asset class, and more investors are looking for access to it, and asset managers are increasingly looking to diversify the way they raise capital. And one of the real kind of hindrances to that is operational inefficiency. And so we provide investment platform technology to digitize the investment journey. And we were acquired by Euroclear at the end of last year. I'm told I have to say that's subject to regulatory approval. And the reason for that is that Euroclear operates FundSettle, which is one of the world's largest fund settlement platforms. And we're adding support for private funds into FundSettle so that distributors will be able to use their existing operating models and systems to invest into private funds.
Thank you, David. Nicola, can you tell us about Actionariat?
Yes, sure. So we all know that 99% of all the stock operations are not listed on an exchange, so it's not investable for the most of us at least. Depends on the audience, I say for none of us, but in this audience I would say for some of us. And we make these 99% of the stock operations not only accessible but also tradable with blockchain technology. At the end of the day, they can set up a tool that we offer on their website, and then you can visit their website and buy shares directly from their website. So we make private equity, if you want to call it that way. We make it accessible. We make it also more liquid, not totally liquid, but more liquid. And we do that based on blockchain technology, to be specific, the Ethereum blockchain.
Thank you. Philippe, Philippe 1, Philippe 2? Philippe with an E, Philippe without an E?
Well, it depends which one is the one, so let's go with that one. So thanks a lot for having us here. What we provide is we facilitate syndication globally. So just imagine, I see the audience here, either a family office, a second family office, in whatever kind of a deal you guys want to invest together, we facilitate the syndication through technology without the need to set up SPVs or funds if not needed.
All right, and I would add the SPV part here. Now with Genn 2, we make all assets bankable. We actually expand the investment universe by creating asset-backed securities that are bankable, bookable in any normal banking channel and through any clearing system. And with that, we had much success. 250 financial institutions in Switzerland are clients of Genn 2, and we securitized roughly $3 billion to this point in US dollar.
Thank you. Now, I learned from yesterday, some panels I was in there as well, we have a market who changed a lot. We have much higher interest at the moment environment. We have a bit less demand in private equity in general. Can you give some words how the current situation in the market affects your business? How do you see what's going on forward?
Well, I think definitely the current macro environment is changing the way that people are investing. I think everyone would acknowledge that the traditional 60-40 portfolio is no longer necessarily fit for use. And so I think regardless of the macroeconomic climate, private markets have a really important role to play in terms of the way people build portfolios. And I guess that really kind of, for us, reinforces the need to provide infrastructure for these kinds of investments, because to date has been very difficult for people to access these kinds of investments, and so they've been very much on the side of people's portfolios, and they've been very kind of limited in terms of the kind of investors where it makes sense for them to invest. And so the easier it is for people to build portfolios from a wider variety of asset classes, then I guess the more reliable and more resilient their portfolios will be, no matter what happens.
Who's typical demand for by whom at the moment you see interesting in your area?
I think the biggest demand at the moment is from private wealth. We're seeing with new fund structures like the LTIF 2.0 coming out, there's an awful lot of private market managers that are bringing products to market that are specifically designed for the wealth management sector. And the big question they always ask is, how are we going to invest into these funds?
Okay, thank you. Nicola?
Yeah, it's a bit two-sided. So on one side, of course, it has a negative effect because there is more insecurity about the market development. You may be more hesitant as an investor to invest in a private company, invest in general. And then on the other side, because of that situation and less venture capital money flowing into especially startups, we have an increased demand from the company side because they're looking for alternatives way to finance themselves. And our tools can also be used for crowd investing, for example. So it's a two-sided story. On one side, it has some negative effects, not too bad, but then it also has very positive effects because we're winning lots of clients.
Thank you. Philippe?
Well, we're currently being used in the venture capital scene. So at the moment, our customer really have either zero deal flow, or their co-investors with whom they want to syndicate the deal are more reluctant on placing a commitment. And what is happening now on our platform is the ticket sizes are still the same for the whole syndicate, but within the syndicate, they start to minimize the ticket size for every single co-investor. So what we are observing is that they are starting to diversify the risk within the syndicate. So the ticket as such is still the same, but within the syndicate, you see the co-investor taking less risk maybe. And this is, if you then are on the primary market, maybe what you mentioned is what you see, this risk approach in the co-investor space.
And that has also a positive side effect. Probably your base is wider than there, although it's smaller, but you have more people interested in and getting into know it. Is that correct?
Absolutely, absolutely. It's for us, since we are providing the syndicate solution on the technology, if you syndicate with 10 or with 20, with 30 or 40 people, it doesn't make a difference for us as a technology provider. And in an infrastructure aspect, the same way. But if you are on the other side, on the recipient side, then yes, we are a startup. We've successfully and luckily closed the first round, but it was very hard because you had inflation, war, and everything with you, and then you need to somehow start to defend a validation, a business case, where at the moment, not really a lot of things are happening. So we also experienced our own.
How does that affect Genn to the current environment?
Well, diversification is key to any investor, everybody in this room, and is interested in investing. And I guess we all of us pay into that, and I would not see any end to this. Actually, I would say that the direct exposure to assets, even in markets like this, and certainly in an inflationary scenario, is actually picking up over time, because only ownership guarantees performance, and only ownership also puts you in the game. Everything else is ludicrous. So, on that side said, most people don't know that the wealth management market is doubling every 10 years in size. That's a fact over the history and time. And for that, it needs new assets, especially, of course, when we had the low interest rate phase, there was a lot of diversification needed. But even now, there's diversification needed, as you see with a couple of examples along the chain. And when you want to pay into that, there must be more diversification also created. This market has to be fed, and if you're not gaining assets, you're losing assets, and you certainly will lose over the 10 years if you're not doubling. And so you need to bring new assets to your investors, bring more diversity to your investors, and this is unavoidable.
From the gut feeling, I mean, it's interesting we say you need more diversification. From the gut feeling at the moment, what's going on is that people go back in the traditional fixed income market, basically, which was more or less not around for the last couple of years, or negative yielding. And at the moment, you have the high inflation as well, where real interest rate is still probably in the negative territory, but you need to do something, otherwise you lose most of the assets in here. Can you a little bit tell me what kind of diversification, or what was the latest deal you have been able to, or what sort of ideas which still in such an environment where I can cheaply get 5% yield on a money market in the US, for example, 5.25% as of yesterday. So what is the edge? Or what is the edge? I mean, of course, you do a securitization, but maybe you can have some example what's because of your ability is at the moment coming to the market by some of your clients?
No, I would say risk-free interest rates, of course, is pulling money away from this development to a certain extent. But as we also know, risk-free yield is something that does not always exist. And we see that now with bigger companies as well, or cocoa bonds on that side. So I would say that the fact is that the market stays solid, it's growing, it continues to do so. And in our world, we see more diversification. On the alternative side, it goes more and more into details there. It goes more into collections, collectibles mainly, into art, into also jewelry and gold and so on. That has not stopped. Actually, it's increasingly more. And I guess maybe it's a momentum of Genn 2 that we arrived at that point. But I would say digital assets maybe have their ups and downs, as we know. When
there's still some ups.
You know, when you have an FTX case, you know, the whole banking world screams that it's the end of blockchain. And it can never happen in the traditional world, and half a year later we have a big player falling out of the system in the banking world. So I would proclaim that it's a steady road. You have to be diversified like Genn 2 is, and with that you have different options.
Nicola, I think your existence is quite interesting. It's just because a law has changed. Mm-hmm. Maybe you can elaborate a little bit, a little bit more flavor into that. What's really coming on? I think many people are not aware of that probably. That's your really new technology which you use from the blockchain technology, but at the same time really the existence is only because of new law. Maybe you can elaborate a bit of that.
Yeah. I'm not sure if we can call blockchain technology new technology because it has been around for quite some years, but it's newer than what you may use in a bank. That is true. But I get the point. So, yeah, of course, we use the Swiss DLT law. And what does the Swiss DLT allow us to do? It's basically just, it was an introduction of a new form of shares. So before you had a couple of forms of shares, ledger-based securities was not one of it, but intermediate securities, Bucheffekten in German, and so on. And now they introduced, the 1st of February 2021, Switzerland introduced ledger-based securities, Registerwertrechte, in German, and this allows you as an issuer of a share, for example, to issue it on a blockchain. So you don't need any other form of share. You can just right away issue your shares on a blockchain. And anything or everything else remains the same. So now you have this blockchain share that is easily transferable with low costs, very efficiently. And now you can think of what can we do with this law and the technology on top of it. And then you might come up with something like what we do.
I think it's important to say that you really help to get direct access for company via their website for new rounds of searching for capital, as long as it's below 8 million. So therefore, you're in the bracket of that law. That's there where you have a niche, and at the same time, you bring this old blockchain technology to it, which is at least new enough that's not done by everyone. So if that's correct in there. Maybe, Philippe, you can also a little bit, how do you do this old technology who's in there, if I say so?
Yeah,
we're in there. How can you get use of that?
So maybe we see three things. First of all, what is happening is people are doing, again, deals with people they know. So it's the trust factor that comes back into place. So you want to be able to share deals and do deals with either partners you have already done in the past, so you had good experience. Second of all, there's this cry for infrastructures or players like us to be interconnected. So to have more flexibility in being able to really also work together, because nowadays you have users on so many platforms, right? So you need to have somebody who in the middle who connects all those players. And third, what we see also is that what Philippe just mentioned is this risk diversification, which is really happening because we were serving the venture capital industry. We built the whole setup for the venture capital industry. But then the financial marketplaces are coming to us and saying, guys, can we also use you for those kind of assets? So the venture capital is also seen as an asset class, but now you see also other asset classes where they would like to have syndication options. And this is the three movements that we see at the current position on our side, and why we also want to be in such stages, enabling also the connectivity among all those players, because this is what users are crying for.
Okay, David, you're also heavily in use of technology in the new world. Where's your key benefits and where's the challenges in there?
I think one of the reasons that Euroclear acquired Goji was that increasingly their clients were saying, we cannot continue with the manual processes that we have in place for private funds. So Euroclear's typical clients on Fund Settle are the very largest financial institutions, whether that be private banks or the global custodians that are serving the very large institutional allocators to private markets, so sovereign wealth funds, pension funds, etc. And as allocations to private markets are increasing and they're looking to increase access to these products to a broader range of their clients, the existing manual processes aren't really working. And I think that's the real technology benefit that we're aiming to bring, and the need that we're really looking to serve is how do you, rather than needing kind of bolt-on platforms or bolt-on processes that are unique and special for private markets, how can we try and sort of bring trading into private markets onto the same infrastructure that's already being used for mutual funds?
Okay, I mean, you're all somehow heavily technology-led. And if I think about that, there's also some risk inherent. Can you tell us a little bit more flavor? What's the most sorrows on your side? What's the biggest risk? Where you think of, I mean, you have heard already what's the good thing there. Maybe I want to go a little bit under the surface. What's the thing which challenges you the most at the moment? maybe it doesn't have to be technology alone, but in general. So what's the biggest challenge for you? What hinders you for more growth than you do actually? I'm not telling that you don't have growth, but maybe just if you could give a little bit there, a bit more flavor. What the good is we have heard. So what is the challenges you face? Who wants to go first?
Sure. Other jurisdictions are definitely moving faster in a more flexible way than we are doing in Switzerland. And you see the connectivity aspect just growing there. I would say that is the biggest challenge is you have this fragmented jurisdiction and regulatory and compliance landscape in private markets. And it's really
globally, not only Switzerland.
Globally, yeah,
really
globally.
In every country is a little
globally,
bit.
Yeah.
The Swiss finish is also done by other countries.
Yes.
Okay.
Correct. So that one, and it's really like interconnecting all those players because nowadays the private markets have become globally thanks to technology, and it's the challenge to be tackled because it can be tackled, but it's the thing that keeps up at night is how to tackle it compliant.
You say you can be tackled. If I just can stay on that before I go further. Is there you try to do influence in lobby group into at least Swiss law? Is something which in Switzerland you can influence, or is that you participate in certain things? I know that you participated in the law yourself, or maybe elaborate later on. Is that something you do as well?
Obviously, we try to educate the market, also being able to say what was not able before because technology was not there, is able today. But it's not our job to be in the lobbying system. Our job is to provide the perfect solution to our customers. So in the end, it's part of the lobbying is educating the customers in our part.
You want to go second?
Yeah, I'm going to make this very high level because for me it always has been the same. For me it's only people. People build the technology, people build the relationships, and if we are tech-enabled or not, a platform also is created by people. Maybe in the future we will see that differently, but my only worry has been from day one, not only with Genn 2, but wherever I've been, was the right people in the right seats and have the right people to create the technology and have the right people to actually do the legal framework and have the right people who are experienced in what they're doing. And all the rest, I would say, is for me a very, very, and now I don't want to take anything away here, but I think all the rest is a wrong pitch or a wrong concern because there is always a solution to a problem. But you have to do it with the right people, and that's not always easy. It's especially for a startup not always easy to hire these people, to keep these people, to incentivize these people, to take them on that journey, especially when you're growing, especially when you're changing league. That's the challenge, and I think everybody that is in a growth scenario or thinks about growing his company needs to worry about the people first. Everything else is not going to work.
This incentivizing and keeping people at the moment in this environment, has that changed a little bit this year than last year or so, or is that more constant? Do you see there some further obstacles right now?
Can I use the people from FTX and Credit Suisse? Yeah, and my answer would be yes and no, but I think it certainly changed throughout the time we were in this growth phase. I think it gotten more and more obvious that if you want to build, you need to build it with the right hands. And I don't think it changed overall. I mean, I actually could even say I stole this line from Oswald Grübel when I met him like 15 years ago or so, when he said like a bank is only a real bank when it's run by trust and the right people. So it is, I think it always has been that way.
Okay.
Totally agree with the people part of what Philippe just said. But of course, it's people making the laws, it's people making the products. But what we are struggling with currently is just we're limited on the Swiss market currently because we work on a law that only works for Switzerland. But we want to grow internationally, so that's something holding us back. And now the right people come into place. If you have the right people, the right lawyers in that case, you might find a very creative solution how to make it work under Swiss law for companies abroad.
And can challenge that.
Right. So that's something that we're working on. So one of the challenges, the major challenges that we're working on. We are not waiting for a MiCAR regulation in the EU because that won't help us in any ways. So we are doing it ourselves, finding a way how to do it, and then overcome maybe the biggest challenge that we have today. And then another challenge is closely related to the infrastructure topic. We're working on a blockchain, currently the blockchain for smart contracts, but there are other blockchains that are used for similar purposes. And then you have a lot of people that you want to reach, and you want them to use your tools, but they're not familiar with blockchain technology. And here again, people come into play. So we have people been working on blockchain solutions that are blockchain native. So they're not building stuff for all the others, they're building stuff for themselves. And usually you have people that are not familiar with blockchain technology being very overwhelmed and not able to use these tools because they were designed for people that are used to it. And and then if you have the right people again that work on this technology and overcome these discrepancies between people that know blockchain technology and those who don't, then you will end up and overcome this challenge as well and have a mass adoption finally for blockchain technology. But we can only achieve that with the right people building the right tools that are usable.
But if I understand it correctly, that you also are based on a technology which is not your own, which you're taking on, or you further develop something, but there's a basic technology which you haven't developed yourself. So you have some dependency on this one, what's going to happen there, and it's something by definition, although you told me it's old technology, it's probably not that old. If I see the host system of a banking system, it's back to the 80s, which is still running, where the people are definitely not there anymore who designed that thing, which that's probably also kind of a risk in there. Is that correct, or have I
of course.
misunderstood your answer?
No, absolutely. Whenever you rely on something, on a third party that you cannot manage, then there is a risk that you are not able to really manage. You can mitigate it, but you cannot manage the infrastructure layer blockchain technology, Ethereum blockchain in that case. That's absolutely true. And also these differences between different blockchains today we have to overcome. The bridging between one chain and the other chain.
And you don't know who's the survivor, etc. I mean, it's the same like cryptocurrency, has too many around there, huh?
Right, and the interoperability also is not really there, and I think that's also that's one of the problems that needs to be solved by the blockchain sector in the future. But whenever you rely on something that you don't manage, there is some risk, of course. Yeah,
like everywhere. David, other than people, please.
Yeah, well, I think the challenge we see is that the value chain for private markets is so long. And there are so many different actors involved, whether it's investors, intermediaries, fund management companies, asset managers, fund administrators, custodians. There are so many actors involved in this process that invariably you end up with point solutions that solve this problem, or this problem, or this problem. And I think one of the themes that's really coming out here is that at some point we need to pull all this together. And that's really hard to do. And I think if we look at the mutual fund industry, it's still not been achieved, and we've been using technology in that sector for almost 20 years. So I think the real challenge here is how do we have a very simple strategy for how we chart bringing solutions that ultimately do join up to try and sort of result in straight-through processing and end-to-end benefits for everyone in the value chain. And I think that's a very difficult problem to solve, and ultimately we'll come back to people, because that's a leadership question, an entrepreneurship question.
But maybe I can quickly say that's the pre-panel we had. I think, the difference between banking and what we so-call fintech is the collaborative approach. I think we're all built here to collaborate. Yeah. So for me, I would oppose a bit that it's really that pulling together, because I think we have to focus on our solutions. We are small entities that focus on bringing solutions to market, and all these solutions add up, and they become this universe that we are in, or that ecosystem that we are in. So I would not be afraid of pulling that together or seeing too many elements, because I think this discussion of value chain control is a very old discussion. I also, in our team, we come oftentimes back to that, which is a useless discussion, to be honest, because fact is there is only diversity also there. There is only, you maybe shouldn't rely on one partner. Maybe you should not only work the two of us together, but the four of us. And I think that is the approach here that actually will solve that puzzle and will lead to that ecosystem and will make it stronger, and smaller segments actually will help that and not do the same as we see now. And I'm sorry to point it out again, but too big to fail has not been solved. It's actually the opposite. It's actually the doubling of the doubling of the doubling again. And
it has just prolonged in the next
and we still have politicians and economists and people that are running around and filling newspapers with rubbish about how we can control an animal that is not to be controlled, and that is simply bollocks.
But politician will remain politician in the future as well, and mainstream will remain mainstream, I think, also in the future. Maybe just as a final round before I open up for questions, we have seen here 4 innovative companies in there, next generation in there. Can you be a little bit more concrete? What's your next project you're working on, other than what you already elaborated in? So it's really what's the next step you can, because you're all in this kind of mood and going forward. We all say, so what's your next step, or what's you're trying to achieve? I know you go in other jurisdiction, but maybe other than that, maybe if you want to go first, David?
Yeah, so for us, being acquired by Euroclear is obviously a huge change for us, and so our focus very much is on how...
So to keep your ability to being fast.
Well, and that is...
That's a challenge, isn't it?
It is, and I think it was definitely the phrase we've been using is we want to have our cake and eat it, in the sense that we both want the resilience and robustness of Euroclear, but remain agile and independent and able to move very quickly. And I think only time will tell whether we manage to achieve that. But integrating our capabilities into one of the biggest global networks is 100% of our focus at the moment.
Okay, thank you.
One thing that we are working on is closely related to the infrastructure topic. So together with SDX, we are in this consortium. SDX6 Digital Exchange, the daughter of 6 that you all know. Mm-hmm. We are in this consortium together with the bigger banks in Switzerland in order to build this shared infrastructure based on blockchain technology that allows to go into private markets, trade these assets for the future. So I think that's not only very interesting because it should help the blockchain infrastructure in Switzerland with all the players involved, but also because there is some entity that is trying to coordinate between the different players, and I feel like that's extremely helpful. We can loosely talk to each other, but if we had someone that is like the project manager and tries to push things forwards and then get back to all the participants and tell them, hey, you need to do this, can we have a decision on that? That helps a lot. And I think that's maybe something we should think about if we want to elaborate more on what we were discussing for a few weeks. Maybe one entity that helps us to do the project management, that probably would help a lot.
Yeah, you have already the first sign up for that one on my side here, talking in the name of Leva, because it's actually exactly what we are doing. So the next step on our side is the Swiss market is covered, so we know exactly what to do, our customers know exactly what to do in Switzerland, and also we're being used outside from Switzerland if you want to structure your syndicates in Switzerland. So our next step is going now really cross-border in case you don't want to structure your syndicate in Switzerland, but you might want to structure it in France or in Germany. And for that, we built a legal syndicate where lawyers and professional experts who are in this industry combining 500 plus years together in now tackling exactly this, the cross-border global syndication. Because when they heard how we approached Switzerland, the question was not anymore, it's not possible. The question is just how. Yeah. So the question is not if, just how. So we're now building this huge legal lawyer syndicate that tackles exactly this. This is the technology that shall drive global syndication. Let's push this globally.
Well, Nicola did actually the perfect pass to me. We are working on the next Asset Rush. It's on the 23rd of May. Everybody should come. That's actually where we connect. That's where we put the puzzles together. That is also where the ecosystem should come together, and we want to do more of that. I think important is that all these players show up not only at Asset Rush, but actually show themselves to the audience, to everyone in the ecosystem, that we can create synergies And I think when it's called project management, I would say that Asset Rush is the perfect example to do so.
Thank you so much. So time is more or less up. I want to open up now for questions. We have 4 innovative CEOs which coming up there in the many things that's going on. Who wants to raise a question? I have to do it myself, so thank you.
Thank you guys for the explanations, information about your projects. My name is Richard Badai of Swiss Wealth Tech. I have a question, 2 questions actually. One about interoperability. That's more for Nicola, I guess, and probably Philippe with P. E.
I got an E.
The other one for the other Philippe would be, since last year we had also another regulatory change in private equity that pension funds are now allowed to increase their exposure to private equity. Is that something which you already experience now in your markets? Thank you.
That's the.
Shall I start and roll back?
So,
Okay.
yeah.
So yes, I think we have not seen a particular interest from higher rated investors and pension funds per se, but I would say that it's a topic on their agenda, and we also see that that diversification still growing. So I would not really count on where it's coming from. Maybe I also don't care too much, to be very honest, because I think it's for everybody to decide. What I just want to make clear is we have lived for decades and for almost ever in situations where people invest into things that they don't understand. And I would like to change that actually, or we would like to change that significantly, because everybody should invest in things they love, understand, and maybe also care about, and we would live in a better world. So that's my honest answer.
So maybe quickly, if I just cut out that one. So what we see, we've been approached by business angels and family offices as of now, and pension schemes are approaching us to ask us, is it possible to syndicate exactly for that purpose? Because we don't want to set up a fund as of now. We don't know how the market evolves. So can we start lean, right? Can you also syndicate among pension schemes, right? So yes, we see this. Unfortunately, we say yes, at the moment it's noise for us, but obviously you can syndicate every player in the world. And that obviously will bring, again, new liquidity in. So on our side, we see at least the demand to syndicate those kind of players.
Yeah, maybe regarding interoperability, was the question tailored for like blockchain interoperability or interoperability between the companies? Blockchain. Okay. Yeah, I mean, today, if you are one blockchain, there's practically no way to move your assets to another chain. I mean, there are some, but only for the very advanced users in some cases. So I think that's very important for the blockchain space, that we have some interoperability, because there will always be more than one chain around, and you need to be able to move assets from one to the other chain.
Not for you.
I think I'd add a comment on the pension funds. I think what we see is that many pension funds, especially the larger ones, use custodians to administer their investments into private markets. And as pension funds allocate more, they are feeling, the custodians are really feeling the pain of that. So I think we're definitely seeing a demand for product from the custodians that are working for the pension funds.
Thank you. Another question in the room? No? Then, yep.
Everyone on the panel today is offering market access to investors who traditionally may not have had access to these type of investments, and I think it's very good. I think one of you mentioned compliance being a hurdle. Do you see, with the rise of these market access platforms that you have, has there been new regulation coming or pressure to limit access that you felt?
So basically, if there's need more protection, because what they do before you had protection action, you have now access on a different way, which somehow overcomes all protection rules. So that's basically your question, huh?
What I've seen is that, bizarrely, the regulators have been pretty innovative in this space. I mentioned LTIF before, but the LTIF 2 framework that's just coming out is really quite a powerful change in regulation that brings promotion of the funds in line with MiFID, which makes it much easier for wealth managers to distribute products within the right regulation and making sure the right investors have access to the funds. But it also just gives investors that the protection of knowing it's a regulated fund structure. So I think regulators they're not clamping down on access. They're trying to really help the market, bring the funds into a more regulated environment in an efficient way, so that access is controlled and done in a transparent and protected way.
It's more European law. Maybe you have something with Swiss law or general, please.
Yeah, so we are not seeing that currently in our space, at least not yet. I'm sure this will come. So that's why we are trying to set up or to come up with our own rules, or our own transparency rules, for example, in order to already start what the regulator will start at some point anyway. So that's why wherever there is a lack, we try to fill it with our own rules. Insider trading rules is one example.
In the end, same business, same risk. I mean, in the end, you will have always the compliance in. If you have new technologies, new ways to structure, maybe you will have a sandbox period, but in the end, you will have, again, the regulation. And I guess our job is that it will not happen like 20, 30 years ago, that in the end, new technologies, new ways how to access private market is, again, over-regulated, and then we have, again, 20 years to deregulate the whole scenario because the wrong players were launching the products. So compliance on our side is always a feature. We see this also as our responsibility. We bring new ways of access, be it tokenizing or access through AMC or syndication or a whole infrastructure. But it's also our responsibility that they take this seriously. So the regulators are stakeholders in our side. We're all operating transparently with them to let them also understand. We know exactly why the regulations are here and why, what, and whom they are protecting, right? But we can solve it with technology, because for us the principle is core and not how you solve it. And this can be solved with technology and with collaboration.
Yeah, a closing word on that. Yeah.
I like to hear it, but probably some loopholes are around there. We will see sooner or later some challenge in the market where it hasn't happened.
I think regulation should continue the way it does for the protection of investors. That should be the main idea here, and I think they're doing a good job on that, despite what many others think. I think they're focusing actually on that. Where they do not a good job is by consolidating these risks into bigger players that only can afford or manage these situations. So I think when we look back, I think we had another problem 20 years ago with, or not 20 years ago, but a little bit less, not with the ones that actually were already heavily regulated. We had not a problem with the ones that were not regulated, or the smaller players in Switzerland, for example, and elsewhere. We had a problem with the big regulated ones. So I think they just should...
Which was very recently as well, huh? So.
And recently again, so it's Groundhog Day.
Okay, thank you so much, gentlemen. With that, we are coming to an end. Time is up. I think hopefully we have been able to bring here four gentlemen to show you on the forefront on innovation. They are on certain different stages, but I'm convinced sooner or later you will become in one or another way mainstream. You're already one step ahead of the other three gentlemen, but I think it's clear and it's great to see that venture capitalist thinking brings us further. Thank you so much, and thank you.
Thank you very much.
Thank you, Thomas.